Well, hello and welcome and welcome and hello. Bienvenidos y hola. Welcome and hello and welcome. Greetings and salutations. Let me first just warmly greet you, welcome you, and say hello and welcome, guys. As you can see, this is not AI. This is not an AI generated dream we're having here, guys. We have Fintech royalty in the house. It's Tevis from, what does that say? No, Fundamentals of Investing. You guys know him, you love him. Sofi Weekly. The great Tevis, welcome. And hello.
Cool, man. Happy to be here.
Thanks for joining us. I know you follow SoFi stock as closely as I do, but that's why these degenerates tune in to my channel, because that's pretty much all I talk about. So I thought we'd talk a little bit of SoFi, just talk a little bit casually about Tevis, because honestly, those guys step on a lot of your lines. You don't get a good flavor for the personality. So anything you want to lead off with, I tend to just you don't even get a basics on YouTube. Get the basics of like somebody's investment philosophy, because people hear me about penny stocks. They think I'm just an idiot, but I have the vast majority of whatever wealth I have in real estate. So the stocks are kind of like an adjunct thing, and the real estate being very, conservative. So I know you're much younger than me, probably 20 years at least, but what's your investment philosophy? Like, what are you saving for? Is it an early retirement? Is it some type of dream you have? How aggressive are you? Just give the people a flavor what your thinking is.
So, first of all, I'm going to be 30 in 2 weeks, so not that young.
Still a couple decades on you.
Yeah, man. Look, I started with equities simply because it was more liquid than real estate. Real estate in Canada is completely unachievable for young people. And I don't know, I think I was telling this to Roy last night, like I did all of the wrong things that you could possibly do. I invested in I was day trading when I first started. Then I invested in like complete shit stocks, and then I started to form a more long-term perspective, and invested in some growth plays. Some of those did well, some of those went to shit, and I just started then doubling down and tripling down and just dollar cost averaging into the ones that were fundamentally sound, and just cut the ones that weren't, or just held the ones that weren't. And more recently, I've just started this dividend portfolio, which I'm really loving. I have, I think, 4 or 5 different portfolios because they're in different tax haven accounts. And the dividend one is the single largest portfolio. And I just started that one this year. So I'm really happy about that. But I don't know as to what I'm saving for, or, when I want to retire or anything like that. I always had a goal to retire in, my early to mid 30s. And I just feel like I'd be way too bored. But I want to have that FU money at some point, and then just do something for myself.
Cool. Now we really have an echo. I don't know what I did. Yeah, I'm a lot older, but kind of the same philosophy. I'm looking for growth with just quality and really good management, conservative management. I shy away just from like Robinhood. It's not because I look at the ER and it's a great ER, and like I've heard a lot of your discussions with Tanner and the guys. There's no denying the company's just killing it, but me as a long-term guy, like I don't think I'll retire for 10 years at least. And I'm just looking at a company kind of built on payment for order flow and crypto. And I just feel there's a lot of danger there, legislatively, regulation. And then I look at a business like SoFi, and the way they earn money is really tried and true. Lending, software as a service. And for me, long term, I see the underpinnings of SoFi just being much more deep and much more stable, like a financial giant in the making, not something totally new and cutting edge that the jury might still be out on a little bit.
Yeah, I mean, like you have it with all of these industries where you have a new entrant completely changing the paradigm. And I think we're well overdue for that in the financial space. It's one of the laggards that across all verticals have been slow to innovate.
Yeah, totally agree. Let me pull something up on my a lot of people think my whiteboard is a sign of mental illness. I totally disagree, but I would just what you were saying, I was talking about sector revolutions. I just because I know you're when I hear you talk versus the other guys, you just have a longer term vision for me, that just aligns more with me. So that's why I was very happy to have you on. But I just thought about like sector revolutions, shopping. You saw Amazon, and there was pushback there, and then EV revolution. Tesla almost died, and there's pushback right now. Everybody's saying EV is dead. Medicine, they said during COVID it was going to be online forever. You see like Teladoc and Prosper and some of these companies, and there's a ton of pushback there. And then, at least in the United States, the old insurance, doctor's office, 35% siphoned off the top model is very, very hard to kill. And if you look at financial services, Tevis, I mean, I just pulled this up off of Google. So, I mean, I'm sure these numbers vary a little bit depending what you look at. SoFi's in the right business. Even if the sector never grows, they can just take market share forever. I mean, U.S. financial services, 23 trillion in assets, revenue 6 trillion, growing even 1.3% per year, which is very, very slow. Usually, I just feel like we're in the right business. We have the right model. We just haven't seen it work yet. The spring is coiled. I mean, I'm trying to find a company that is this undervalued for the next 10 years. And I just can't find it. And that's why I bought another 1,000 shares today at $6.82. Reaction. Sorry.
Yeah, there's a couple of thoughts that came into my mind. So I think, first of all, you're talking about these long tail changes over several decades, and you have to understand that people just generally are hesitant to change. And over the long tail, they're fairly not as educated on bleeding edge technology. Like the adoption cycles have gotten much better ever since the internet because you have more access to information. But even still, it takes longer than you would expect. So that's the first thing. The second thing is that I think the internet really equalized the playing field in a large degree. I mean, you can talk about the commissions, but you also have to think about like the entire wave of innovation that the internet brought on, and then cloud compute brought on, and then now AI is going to bring on in terms of efficiency unlock. And people want more consolidation because now they're asking the question, okay, well, if I have all of this optionality at my fingertips in terms of, placing instant trades, seeing, like essentially becoming their own financial advisor because they have the information parity, then they're saying, okay, well, why am I paying all these commissions to my banks? What is the value that these banks are providing me? And there has to be some technological benefit there because it can't just be a holding spot and be paid for their expertise anymore. So they're sort of losing all of their core value propositions, especially amplified by the fact that people don't go into branches anymore, like physical branches. It's all online. And so where do you find that benefit, right? You find it in these specialized products that SoFi is offering, these financial services, and you find it in the consolidation, right? I think the iPhone App Store really brought on this big wave of training that user behavior over a decade plus, to have this all-in-one experience, right? And I think that SoFi is really doubling down on that for the finance side of things. Yeah, you can do your mortgage here, you can get a personal loan, you can also go to your brokerage, and you can do all of these other things. You can pick your credit. And so it's all in one. And I think that is a very interesting value proposition because when you compare it with all of these other institutions, they're laggards and they haven't really had to change their value proposition around because they're so large and because people are hesitant to change, just going back to the full circle. But they're hesitant.
You have market domination and you have margins. Why are you going to innovate? I mean, that's the mega banks. You just haven't been able to challenge them. You needed to go to the bank. You needed to go to the ATM. One of the things I really see that, age before beauty, as the old saying goes, but as somebody like so many YouTurders are your age and even mostly much even younger, so I didn't grow up with the internet. Like when I was in high school, 0 people had a cell phone, much less a smartphone. Like my first cell phone was like a Motorola StarTAC. So I didn't grow up with anything online. It's just a completely different frame of reference. Perhaps why I don't trust companies as much like Hood and Palantir, sort of the unknown, and why I still, I don't mind paying someone for their expertise because just told me that over the long period of time, that expertise, people with decades and decades in the industry, even if you don't always agree with them, you should probably listen to them and at least consider their point of view. Because when you talk about retail investors, the AMC crowd, that's not just retail investors such as myself, pushing into the 50 category. They're talking about younger people, people who are, because there's native digital banks and there's native digital people. Like, you're a native digital people. You grew up with that thing in your pocket. People like me were still skeptical, the Gary G's, the MC Gary G's of the world. You just fear what you don't understand. And that's why I think SoFi has the perfect timing where this rush of people, their student loan borrowers, they're going to blow up. Their careers are going to blow up. And this is just poised to absolutely become that top 10 financial institution. Sorry, I need a drink.
Yeah, I think there's a lot of things, right? Like, one of them is the fact that, like, I work in tech and I pride myself in being sort of on the frontier of a lot of these new technologies because I have to be to do my job successfully. And even for me, it's difficult to keep up with some of these technologies because of the level playing field now that everybody is coming out with their own app. It's so much easier to do that. All of the barriers to entry have been broken down. And so it's just the pace is moving much quicker. And as a result of that, the need to change is so much more dire.
Don't you think that makes Galileo just so much more valuable than everybody is recognizing? It just, when I hear people say just a bank,
Yeah.
I'm like, you're not just missing the forest for the trees. Like, you haven't even pulled your head out of your backside yet, because Galileo is the whole thing. I mean, Lapointe is telling you, he's like beating it over your head. And of course, Dolev serves him up this question because they just had a full day of, cavorting together or whatever, talking about the numbers. I'm sure just, they probably take him to a strip club or something, give him a bunch of champagne. But I don't know how these things go. I'm not an executive. But anyway, he's talking about tech, and he's basically like, how the hell are you going to get from, 2 cents a quarter right now to 20 cents a quarter in 2026? And Lapointe just sounds disturbingly confident. He's like, 25%. He's almost, you can hear it in his voice that he's sandbagging. And so I wanted to look at something from the interview. And basically, Dolev is gushing. He's an even bigger SoFi fanboy than I am, if that's possible. But he's saying, so if you want to talk about the tech platform, mid-20s CAGR through 2026, how can you expect to achieve this growth? So I just want to jump to right here. And sorry, I'm terrible at this whiteboard. I just started with this too. This is Lapointe. We have dozens of customers that are in various stages of integration or early stages of revenue monetization that you could expect to see continued momentum and growth over the course of the next several quarters and years. And then we've talked about over the course of the last several quarters, we're targeting partners that are large financial institutions who need to modernize their tech stack, and this one I think is super important and overlooked, or large brands that have big installed bases who want to get into financial services. And I think golf, think NBA, think, many other types of organizations that could make this a profit center in partnership with Galileo. And on that later part, we're seeing very robust demand and are in great conversations with a number of top banks in the US and top banks in Latin America. So I think what people are saying, is this going to happen? Is this going to grow? I think it's already happening. And I think management is telling you everything is in place. The revenues just haven't started to flow in yet, but they're going to start to flow in heavily in 2025, and they're going to be coming in a gusher in 2026.
Yeah, I'm not sure about the timeline exactly, but I think with regards to Galileo, you're pandering to the exact same companies, the same audience that you're disrupting. If they didn't see the forest for the trees to let SoFi ahead of them from a technological innovation perspective, they're not going to see the huge need for Galileo until it's far too late. They're going to be slow to adopt that new technology because they fundamentally are not innovation-driven people, right? They don't see the need for the value prop to change. And I think with regards to that, the regulation will really help. Can you still hear me?
Yeah.
Oh, cool. We have no more echo. As we go to a place where you have more of these scandals, more people losing their money because of a glitch or whatever, you're going to have all of this regulation where the regulators are going to say, hey, you can't be on COBOL anymore. You can't be on this antiquated coding language from the 70s. And you have to get with the times because it's just a huge public risk for you not to do that. And that's really going to tie the hands of a lot of these executives to move to Galileo because they have to. Not because they want to, not because they want to embrace that change and they want to be first in line, but literally kicking and screaming through it.
Don't you think that would catapult SoFi to sort of, if that regulation were to come to pass, more of an immediate tech multiple? Because I think it sounds to me like they're getting there, with today's landscape, and Galileo is actually doing really, really well and things are on script. It's just, they just bought these companies. You're in this business. I mean, a couple years is nothing to integrate two companies, then integrate them under a third company and already be selling to many major banks in multiple continents. I mean, that to me seems like they're executing quite well over only, 3 years since actually buying Technesis.
Absolutely. And like there's a lot of stuff that has to go behind the scenes to make the entire consolidated technology entity like viable. But I think with regards to the audience, there's really two things that makes this completely that blows up the timelines. And number one is the fact that these POCs take multiple years sometimes because there's mountains of red tape for a lot of these companies. And sometimes rightfully so, because there's millions of users that have to migrate over. They have to be really careful about that because it's not something that they can just flip on one day, press a button, and voila, it's done. They have to think through that decision. Now, the flip side of that is the moment that they do that, there is strong hooks in them because they can't go to another provider because nobody wants to go through that shit again, right? And so once you flip over millions of accounts, the switching costs are so high to move to another provider, your lifetime value is going to be much, much higher as a result because you sunk the hooks into them. And so if you're somebody like Galileo, like if I was on, let's say, Galileo's product team, that would be one of the active KPIs that I would be tracking is how can we make the switching costs higher? How can we dig our hooks into these providers? Because the more that we do that, the more we essentially reduce the churn, increase the retention, and increase the lifetime value because it's just so much of a hassle for them to switch to another provider after the fact.
Yeah, people think it's a hassle to switch banks. Imagine switching the backbone of your entire company. I mean, with all these users. Want to read one more. This was from LaPointe as well. We're in RFP discussions with many of the top U.S. banks right now. Those conversations are going extremely well. Obviously, as we're focused on larger customers and have more durable revenue potential, that have more durable revenue potential for us down the road, exactly what you're talking about. The sales cycle is a little bit longer. It can take 1 to 3 quarters to sign up a client, but then integration takes longer than that. So you're talking at least a couple of years to get somebody fully on board. And then you start generating revenue. I'm just shocked that people are so impatient with this thing because you clearly have absolutely no understanding of what you bought if you're already expecting Galileo to be a major profit and revenue center, because it's just too fast. You cannot make that happen in just 3 years. I mean, they were servicing these little penny ante customers. I mean, they have great technology, and now they have this all-star team build. I mean, I'm reading the resumes of the people from Galileo. It's like Google, Apple. I mean, these are people who are used to being in these giant institutions. And I think that's why SoFi is thinking so big. And everybody's like, you're crazy. Top 10 financial institution right now, that's 150 billion market cap. You're a nothing burger. You're 6.8. But I just look at Noto and I'm like, this is a guy who can actually get it done. And I hear LaPointe and I'm like, this guy is young. This is the kind of guy who could build this company for decades to come. And he has a goofy haircut where he'll just stay somewhere and kind of stay in the background. He's not like, trying to be all flashy and like move up to be C. You take care of the guy, but he's really a brilliant guy. I think SoFi has a great team. I think Galileo has a great team. And everybody's saying, oh, it's a crap stock. It's a good company, but it's a crap stock. There are market mechanics out there that control everything. And if you're just too impatient and you can't think for yourself, you're going to miss out on great opportunities. And if you buy stocks after they make huge runs, you're going to lose a lot of money. I mean, everybody's now like, I'm going to switch to NVIDIA. I'm going to switch to Hood. I'm going to switch. Not after the run. Wait for them to at least pull back a little bit. I don't want anybody to get killed. I don't care if you buy SoFi, but I just don't want anybody to get killed. I don't. There wasn't really a question there, Tevis.
So look, if we just close off on that Galileo point, I think SoFi is not going to get a hybrid multiple until Galileo makes up a bigger percentage of the revenue mix, period. Right? Galileo right now is very tiny in comparison to how much of, if you break out their total revenue, the majority is in lending, and then, financial services and Galileo are much smaller chunks. Until Galileo is like 30% of total revenue or more, then they're not going to get that hybrid multiple, first of all. Second, if you just read between the lines of that sales cycle and we just assume for a second that it's 2 years, then the deals that we're winning today, it stands to reason, they're deals that have started back in 2022. But don't forget, Galileo was only purchased in 2020. Technisys was only purchased in 2021. There takes some time to integrate those two entities together to basically make a consolidated tech offering. And they only started referring to themselves like as Galileo for their entire tech segment, including Technisys, I think last year. So my point is, if you really want to see the massive like RBCs of the world and the JP Morgans and the Citibanks to introduce Galileo, those deals might be started today, but you have to assume that they're going to be finished in like 2026. And so the deals that you see today didn't start last month. They started 2 years ago.
And the executive team's been talking about this that long, and they've told you exactly what to expect. There's going to be this transition, but people don't listen. People just want now and people want the spike, but I feel fine knowing that this is coming and the stock's being shorted. I mean, if you have the patience and the right time horizon, it's just a huge, huge opportunity. I'm kind of willing, if they push it much lower, I'm going to lever up, really heavily, because I think 5 is really a floor on this thing unless things just go completely sideways. I mean, this company's going to make a lot of money. The membership's growing, the deposits are growing. You're seeing signs inflation is subsiding. So they're going to have a tremendous amount of demand for home loans, student loans. That's really going to get the wheel going with their new general counsel, the lady they hired from the New York Fed. They're obviously right on the cusp of getting approved for business banking, business lines of credit, all the professionals they bring into the student loans on the wheel. So many of those people are professionals that either own or have strong partnership connection with small business. I think small business can take off even faster than tech, to be honest with you. Much, much faster profits. I think people are focused on the wrong things and they just don't see the opportunity. But I think, specifically like, okay, you can't compete with JP Morgan on IPOs. And probably true, not right away, but you can certainly go after the small business customers that you already have with student loans and bring them in for home loans. I mean, there's so much immediate opportunity there, so much meat on the bone. It's underserved as well.
So a couple things. I don't think SoFi is going to be in the $5 range anytime soon, honestly, because we formed such a strong floor by being in the 650 plus range consistently. But I think with regards to the catalyst, just people are impatient, and that's not a SoFi specific thing. They're just impatient with regards to anything, right? And if you look at some of these initiatives, like let's say they come out with the business banking. All of their initiatives are going to be money losers for at least a year before they start making money, before they're profitable, right? SoFi is sinking $100 million into credit cards, and SoFi Money, I think, is the other one. So basically, they have lines of financial services that they're losing money on, and people, I don't think, will really respect that timeline that it takes to get these things done. If you think Galileo's sales cycle is 2 years minimum, if you think any new product line is going to lose money for a year until it makes money, all of these things are going to contribute to that EPS estimate for 2026 and then some, but people will drop the stock in that quiet period that we're in right now.
Yeah. And I think people are very, very naive thinking, oh, they can't bring out options because their tech people can't get it done, or they can't roll out this feature. They can build these things quite easily in terms of the programming and such. That's exactly what you're saying. There's a tremendous amount of pressure on them to stay GAAP net profitable every single quarter. That's completely illogical for a company trying to grow right now. If they lost a cent and they did something amazing, to me as a shareholder, that would be a lot. But it's not really an issue of whether you make 1 cent or lose 1 cent. It's irrelevant, really, if you have a brain in your head. But the point is, management is under tremendous pressure to stay profitable, and they know that if they were not to be profitable, the stock's probably going to get like cut in half or just something ridiculous. I mean, I'm not saying it would be warranted, but it would happen. So they have to, have the brakes on in so many respects. They can't push money out aggressively with loans. They can't roll out new features aggressively because, as you say, nothing makes money day one. I mean, there's always these I mean, it took them just this, contribution positive, which is kind of a fuzzy metric given all the, uncategorized expenses. But be that as it may, I mean, it's just an issue to me of they have to pump up that core profitable lending business to a degree that it can carry anything else they roll out, so that Wall Street and the shorts don't just hammer them right in both testicles with a steel toe boot.
Yeah, I mean, look, man, different people view SoFi differently. If you're traditionally like a financial analyst, you're going to view them with different metrics than if you're traditionally a tech analyst. And SoFi essentially has to appease both of those groups of people. And the thing is, they have to be growing consistently and sustainably. They can't just have a breakout year, because then the next year is going to be complete dog shit comparables that they're going to seem as though, they're not doing as well because they had a breakout year the year before. With regards to the profitability piece, like, I think they're too conservative, quite frankly. I would love to see more on the technology side so that we can get more of these irons in the fire. At the very least, for them to have a stronger culture of product communication that doesn't take, a year plus. But I don't think that anything gives me cause for concern, because I look at the financials, I look at the metrics, and everything is going the right way. So,
there's much less volatility in the financials than, any of these other companies in fintech, Hood, Affirm. I mean, SoFi is growing in an extremely stable way. So I think, again, that would appeal to, an older, more conservative investor, where some of these stocks that are really jumping around, and plus a lot of these kids are trading options. I mean, there was guys my age when we started investing, very, very, very few people were trading options. I mean, it was like on the surface of the moon. You didn't have a Bloomberg terminal, or you were on, constantly on the phone with your broker. I mean, it was a very sophisticated strategy, and in any kind of options. And now everybody's trading options. And so I think that helps a lot of the younger people embrace volatility and be extremely impatient, because they're picking strikes like weeklies and, monthly options, and they're buying options. And then they get really angry when these things don't work out. And you're like, the option seller wins over 80% of the time. Like, you're just feeding the beast that you're cursing at. Like, just, buy some shares and sell covered calls, or just buy shares and don't do anything. Like, most of these retail investors are just too stupid. I feel like most of the Hood investors, they're just feeding the beast, because what do you think payment for order flow is? I mean, they own your data. They know what you're going to do. Their algo knows what you're going to do before you do it. And I think they use that to clean your clock, because this is a zero-sum game. And every single year, these hot shot young Lambros on Instagram on Hood, statistics say they're losing money. Day traders lose. I mean, I did it too. You lose a lot of money. You don't, and Wall Street is there making the money. There's a reason these guys have these mansions in Connecticut and these Maseratis and, beautiful, beautiful mistresses. Although, by the way, if you tell me if you got to go, because we still have to do 10 questions with Tevis. But go ahead, react to whatever I was saying. I can't remember.
Yeah, I think it incentivizes short-term trading, which is not really it's antithetical to really long-term investing, which is fine. I mean, it's just going to lead to a whole cohort of retail investors being really enthusiastic when stock go up and really pissed when stock go down. And I mean, whatever, it is what it is. Like, you saw the investor base being so freaking happy when we went from 4 to 12. They were just over the moon saying, oh, let's go to 20 next. And then we went from 12 to 10 or 12 to 8 or whatever. And they're saying, okay, we're loading up for the next round. And then when we didn't do that, it's like super fucking quiet. And it's just all of those people are incentivized for the short-term gains that they don't get it, they're out. But it's an opportunity for the rest of us, because don't forget, man, I would rather put my money on a management team that has skin in the game And as much money as I'm going to make, if SoFi hits 25, 35, or $45, I guarantee you Anthony Noto is going to make more than both of us combined. So, like, hey,
If SoFi hits 45, you'll never see me again. DannyDealz is in the wind. DannyDealz is above the law. I have more leaps than a little bit, Tevis. I'm in control of not Noto shares, but I'm in control of more shares than CTO Jeremy Rochelle. I mean, because he's dumping. I just want LaPointe shares. I don't want Noto. I think has 8 million. Can we trash the Cham Wow for a minute? Because I hate that fucking guy. The Cham Wow, these SPAC guys, these guys are vampires. I mean, Cham Wow owns more shares than Noto. He owns Chamath. He owns the SPAC king, the altruist, the charity guy, the guy who's going to save the world. The guy who's going to give everybody free Zappos, the guy who's going to build moccasins for people in third world countries out of cash, out of pure, currency. It's like, I understand it's a free country and a free world, and these guys can set up a structure. And if I had the money and I could convince people to give me, say, $500 million and I got to keep $50 million worth of stock or whatnot for doing really nothing. I mean, Foley's even worse with that PaySafe. Oh, I really got burned on PaySafe. I'm stupid. But Bill Foley might even, he owns the hockey team in Vegas and this stuff. But how in a society that operates with any logic, how are these guys not incarcerated or being flogged? I mean, the SPAC, I know IPOs probably work the same way, but when I read the list of shareholders and people are like, well, why isn't it going up? Why are there so many shares? Why is it so easy and cheap to short the stock? Why is the borrowing fee sometimes negative? I mean, that's a lot of shares for putting together some paperwork.
Oh yeah. I mean, you're definitely gonna see that situation arise. I was having this conversation actually with a friend because we were talking about the roaring kitty thing, whether it's market manipulation or not. And, basically what I told him is, look, neither of us have been put in that position where we have that much power and we have that much opportunity to abuse the system. And I don't know, man, like we can critique all we want from the peanut gallery, but at the same time, if you were in that position and you stood to make hundreds of millions, if not billions, and then just go off the grid completely, there's very few people who would really be altruistic beyond that personal greed. I think it's like hardwired into us. So people are going to abuse it. It's a system that like we've broken through as a retail investor crowd by having all of this access to information. But don't forget, like this is a huge, huge, huge industry. And we're still very early in the game. Like it's been, 10 years, 20 years that we've really had what we think is like we're finally getting to a seat at the table, right?
Yeah, I think there's at least the illusion of that, but I think only really sophisticated people will time it right and actually make all the money. Like Roaring Kitty, he was a Wall Street guy. I mean, he was an analyst and a trader. So, I mean, he is not retail. And he was funded by somebody. I mean, in my opinion, he didn't just take his savings, from his whatever it was and just amass hundreds and hundreds of millions of dollars. I guess it's possible, but I don't buy it. I mean, I feel like there's smart money behind some of these like memes and photos he's taking. And I just feel like it's still all about manipulating and skinning retail, even if you seem like one of them, because not everybody can dump at the top.
I don't know, man. Like, I like if you want to get really conspiratorial about it, then I guess. But at the same time, like in the very beginning, like before all this started, he had I think 53,000 in GME. He was basically like me, making videos on YouTube day in and day out, talking about the fundamentals. Instead of a Celsius, he would have a beer. He was a little bit more charismatic. He would have sunglasses, whatever. But he only had like 50K in GameStop. And then what happened was Ryan Cohen came in, and that's what really threw all the spotlights onto GameStop that led to be a short squeeze.
I was more talking about this latest
recently
option bet. That's a big bet. I mean, like you have to know people to even make that trade, or I don't know. It just seems naive of people to think, oh, he's one of us and he's, can make $1 billion or something. I feel like at that point you're smart money. You're in control of a huge portion of, the shares.
He dumped all his calls recently, and I'm like,
Yeah.
well, shit, could have seen that one coming. Like he was walking back all of his statements on the live show. Like he was basically telegraphing that he was going to do that. And like, what do you expect, man? Of course, like I would do that. You would do that.
What do you want him to burn? You want him to burn and go down to be a nice guy? I mean, that's not how this works.
Yeah, exactly.
Yeah, no, I agree with you. I just think people are way too quick to identify. Like people love SoFi, they love Noto, they think he's, their best friend because he's buying shares. Like Noto's is Wall Street insider as insider gets. He's a cold-blooded killer, and he will slit your throat, proverbially. The guy's not, and that's why you want him, because he knows the system that well. He's so great at hedging. He's so great at anticipate. Like a lot of people laugh. He's like, well, we're only going to see 2 rate cuts. Remember that? And everybody said, oh, inflation's cooling in January and stuff. They're like, Noto's way too conservative. That's crazy. 2 rate cuts. Like there's going to be 6 rate cuts. And then it kind of comes full circle and you're like, hey, guess who was right? And that's the kind of thing where I'm like, I was wrong once again, and Noto was right once again, which is why I'm not investing in Danny Inc. I'm investing in SoFi. Because I like it when management just proves over and over they're on a completely different level than me and just know a lot more than me. And I'm like, Noto was right. So, just little things like that kind of inspire confidence that he really understands the macro at a really deep level.
Dude, I totally understand how people can get emotions tied up into their stock holdings. They can marry their stocks and the stocks can do no wrong. But it's the same thing that causes people to like get angry at you when you sell a position or get angry at you when you change your mind. It's like, guys, we're all here to make money. Noto's here to make money. I can, there's people on retail that can be Noto's absolute best friend, and then they can cut their SoFi stock and sell and make a profit and never look back. It's like Noto is for the exact same thing, man. We're all here for the same reason.
Yeah.
Take your emotions out of it. Roaring Kitty is going to sell. It's not about, sending a statement. There's like 3,000 plus stocks out there in the market. That's what I love about it, right? Like there's so much optionality. You're not trading in a vacuum. You can always move back and forth. So like, I don't understand this idea of like, oh, I'm ride or die with this for life. And like, I am like that for a lot of companies, but like, there's going to come a time when I'm going to sell my Tesla stock. There's going to come a time when I'm going to sell my SoFi stock. I can't eat SoFi shares. I can't spend SoFi shares. Yeah. I spend dollars.
You can't, if you're buried with it, really, what good did it do you? You're just going to ruin your kids.
Exactly.
Leave them Tevis money. That's no good for anybody, especially up there in Canada. Money goes kids get crazy up there. I know the blow's expensive, but just because they have to bring it all the way up. But anyway, that's neither here nor there. We wouldn't know anything about that. So I wanted to run through 10 questions with Tevis, if you'll indulge me, because the people are very curious. They want to know. Number 1 was, how old are you? You already told us that. You're closing in on 30. Number 2, I know you've been backpacking through the EU, which I kind of read staying in 5 stars, but these are from our viewers, by the way. These are not from me, but I'm not saying you're committed, but in how many EU block capitals would there be a young lady that would say they have a boyfriend named Tevis?
Pass.
Okay. What is your number 1 holding, whether it be a stock, crypto, ETF, mutual fund, sort of anything besides your house or whatever, any investment? What would be your number 1 holding?
Tesla is 27% of everything, every equity that I own combined.
Wow. Okay. I was early in Tesla, and I know a lot of people who work there, and I trimmed, bought some. It's a lot less than it used to be for me, just because I'm a little bit scared of all the competition out of China. But I still can't argue with an aggressive Tesla position. Here's an interesting question. This comes from Yefis. Are there any investments right now that you really like, but there's something holding you back? And so what would be one of your red flags? You say, okay, this company's growing, but I don't like the debt. I don't like the CEO. Is there anything right now you're sort of on the fence with, and just kind of informs people's thinking about how you look at investments?
Most recently, Unity. I talked about this a couple of days ago.
Mm,
It's something that I'm bag holding pretty hard. I'm down like 50% on it, 55%, something like that.
I
Um,
see.
and it's just like, I really love the fact that it's a duopoly, and I love the long tail like macro trends because as we move into a world where AR is a bigger and bigger presence with Vision Pro and others, it's going to be more prevalent. I hate everything else about it. Like the CEO really ran the company into the ground, and
Yeah,
now, but it still remains to be seen whether that company can turn it around or not. And it's being priced like it's going to go under. So
yeah. Do you allocate your investments by sector? Any particular way you do your allocation? Or you're probably young, you're very tech heavy. Obviously, with 27% Tesla, that's already tech. I mean, I consider Tesla a tech company. Everybody's very scared of these Chinese companies, but they don't really understand what Tesla's doing under the hood, so to speak. I mean, Tesla's way beyond cars. I think if you really look at a car as a robot, which is how Elon Musk is looking. But anyway, that's neither here nor there. But I think most young people are kind of completely ignore like sector allocations. Wouldn't you say so?
yeah. Oh yeah, yeah. Like, dude, I think the whole 60-40 portfolio of like, bonds, stocks, like I think that shit is dead, at least for
Yeah.
young people. They want it's where we live in a generation of instant gratification, man. And I can't change that.
Yeah. So are there any big red flags you're seeing with SoFi? One of the things for me is those unallocated expenses, a little bit hard to tell. I really think Lapointe laid out a much more clearer roadmap for how and when Galileo is going to make money. I know if you were good at reading things and investigation, you probably could have found out all this information, but I think they're really listening to people and saying people want sort of a clearer picture. But what are your biggest red flags in terms of SoFi or in terms of like the fintech sector in general? Anything you see that could stop this steamroller of this fintech revolution?
So I'm super bullish on fintech over the long term. With regards to SoFi specifically, I wouldn't even say it's a big red flag because I don't want to have alarm bells in people's heads. But something that I really don't love or that I wish I could change is I'm seeing other fintechs be much more leaning on that tech aspect of fintech, whereas SoFi leans much heavier on that fin part. Like they're more of a traditional financial institution. Like if I were to draw a spectrum, and on one side you have Wells Fargo, and on the other side you have like the most innovative app
Yeah.
out there. SoFi would skew towards the institutional side, which I don't love
Yeah.
because they're supposed to be a disruptor in this space. And that means a couple of things. It means that they have to innovate. Number one, it means that they have to move faster. Number two, it means that they have to have a higher quality and a better user experience. Number three. And that's something that by and large we've been seeing with all of these new product launches. I don't love seeing the announcements of like, Robinhood coming out with like the sexy new thing and
Yeah.
Affirm with like a sexy new thing and, all of these competitors. And SoFi's like, oh, well, like we have Zelle
Yeah.
and like that's the only thing. Like, I just wish they would keep up and they would be one of the companies that's actually innovating. Like they're doing something that no other fintech is really doing out there, or
Yeah.
they're introducing like a revolutionary new concept. I know Tim Sweeney he's like a member of the community, has been basically DMing Anthony Noto all of these ideas for credit cards and how credit cards can link in with like the SoFi Plus referral or the benefits. And that's really interesting to explore as a concept. So I just wish we could see more tech-based innovation from them, product-based innovation that really makes them a pure
Yeah.
fintech play and not just like a hybrid legacy model.
Yeah. I feel like they went really traditional lending heavy because they just had no choice. I mean,
Well, it's also part, Danny, of like their DNA of being more conservative. They'll just repeat what works
yes.
and they'll be slower to adopt new risky things because
Yeah.
they're not going to bet the farm on any single new initiative.
Yeah. Noto's constantly talking about he wants to maximize return on capital. That's a very conservative mindset. I mean, in what time period? Because if you're innovating rapidly, you may be maximizing return on capital, but you don't really understand the exact mechanics of how you're going to get paid yet. I mean, I would like to see SoFi emphasize nothing but Galileo, do this financial stuff behind the scenes, because if they hired somebody good like a Tevis, somebody with a PhD in corporate speak and team, you know what I'm talking about, somebody who's, they could really change their image, they could change the narrative, but they don't try to do that. It's these like salt and pepper temples, the windbreakers. It's this monotone again and again about adjusted EBITDA. It's not sexy. It's not exciting. Nobody cares. Anybody who cares about that stuff already knows it before you said it on CNBC, because they can read the fucking financials. Because none of these kids, they don't care about that stuff. I feel sometimes like Noto is brilliant executive, and I love him. He's my biological father. But I feel like sometimes when he gets out there on the golf course with the fucking windbreaker, he's throwing a bucket of cold water on my stock, on my shares. He's just putting out, like, the numbers he's putting out are excellent. My shares should be heating up. There should be a little smoke, should be a little fire. And he comes out and he starts, talking like a duck about adjusted EBITDA, and it just kills everybody's boner. It's like I want more LaPointe. That's what I'm saying, Tevis. I want more Tevis. I want more LaPointe. I love Noto, but I'm like, the guy's older than me. He's like, kids and the market and the retail, the massive retail investor ownership, they just don't seem to respond really well to the guy. Maybe I'm crazy.
No, I think like the spiciest part of Noto is his sports aspect, where like he'll talk about these cool partnerships and marketing initiatives and, the stadium and all that stuff. And that's something that makes me really excited, because I can see this being a household brand name. I just wish he had a little bit more of that loose cannon in him. Like, I just came onto this call. I was watching the Tesla annual shareholder thing. And, it's like, yeah, we can absolutely be the biggest company in the world. Robotics can be 30 trillion, and throwing out all of these things and talking about the roadmap of how to back that stuff, not providing dates, not providing promises, but just saying opinions in the future.
Yeah.
And cool. I wish I had some of that for SoFi. And don't get me wrong, they can be a very successful company by having this all-in-one consolidated offering. Like, if I take two individual apps and I make them one app, there is value in that from a user perspective. What I wish to see is something of their own that other people are not doing in the market, for them to start taking some risks from an R&D perspective, from a product perspective. And a lot of that comes, with that tech culture, and less so that finance culture.
Yeah, I at least more of a balance. If the CEO is really going to be your face man, your figurehead. Obviously, Noto has an incredible grasp of the numbers. I mean, he's really a numbers guy, and he does extremely well in terms of his competency. He comes across extremely competent, extremely intelligent, good vision. But I'm just saying, the young people that are putting money into the fintech sector just clearly aren't responding to him, because the numbers are really good. The growth is really good. You'd think there'd be a hell of a lot more enthusiasm around the company, but it just never gains any traction. And I mean, people think, oh, GAAP net profit, it's going to take off. Oh, if they prove it again that there's no sophomore slump, the company's going to take off. People are definitely trying to get next to you. They think women in their town. He doesn't know anybody in Detroit. Shut up, Toto. Leave the man alone. There's better things to do than try to set you up. You're hopeless. Clearly live in a basement. Go away. Leave Tevis alone. Anyway, Tevis, I apologize.
Did we get through 3, 4? How many we got through?
I don't know. There's a lot of people looking for dates. There's no way this many exotic dancers. The questions. I'm sorry, I forgot about that bit. Right. Let me see. I think we were all the way up to 6. So 7. What is your estimate for SoFi Q2 EPS?
2.5 cents. I don't know. I haven't looked at the numbers recently. 2.5, maybe 3 if we're just going linear extrapolation, but I'm not sure what the analysts are expecting.
They're basically, I think the consensus is 1. I'm looking for 3. I think, it's 2.5, 3 sounds quite reasonable. And to piggyback on that, number 8, how about the full year EPS? What's the Tevis number?
Honestly, I think around 10
cents.
Yeah, 10 cents.
Like 2.233 something.
It was higher in the beginning of the year simply because we expected more rate cuts.
Mm.
I think at this point, it really is on the back of financial services. Yeah, I would say 10 cents. I think analysts are expecting like between 6 and 8 cents. So
Okay.
yeah, I can see 2233. I can see 2224 or something to that effect.
Nice. This is just kind of a random one, but you mentioned, I'm sure you've said this many times, but Tesla 27%. How much SoFi do you own, and is SoFi your largest fintech position?
Yes, largest fintech position. So my top three are Tesla 27, Bitcoin 15 and a half, Bitcoin and SoFi are exactly the same at 16.5.
Okay. Interesting.
So, yeah.
Yeah, Bitcoin guy. So, definitely a mix of some more conservative investments and some more cutting edge stuff. I guess it's just whatever you feel like is going to be there for you in the future, and you'll go anywhere you see the value.
Bitcoin's been very kind to me. It didn't start out at 16.5%. I started investing in Bitcoin like 2018, I think. Actually, I have it here. Let me see.
Yeah, that's some sweet action.
My first, 2018, 2019 for Bitcoin, I just bought small amounts, and then I just started heavily buying in like 21, 22, 23, 24. So, yeah.
So what do you think we're going to see for the rest of the year? You think inflation's going to continue to slow down? We're going to see rate cuts, or do you think these idiots are going to just continue to spend way, way beyond their means, have no savings, continue to just run their credit cards and do more balance transfer because they have 12 months interest free? They buy yet another big screen TV. I mean, can people control themselves at all, or are we just completely doomed? What do you think?
I think we're completely doomed at some point or another, but with regards to like the next year, I'm looking forward to the election. Honestly, I think that's going to be really interesting to see what happens, especially as like we heat up the news coverage around that in like August or so. I think with regards to SoFi, honestly, man, like I'm not really expecting too much. My expectations have really died down, and like for the summer, that is. But come September, October, I think the excitement around the first rate cut will be felt, and that's really going to lead into a rally towards the end of the year, is my prediction. So I think SoFi is going to end the year in double-digit territory. I'm not sure where exactly double-digit territory, but we're going to end there on the back of that first rate cut, on the back of Q3 being really strong, on the back of Q4 hype. Probably have a new announcement at some point with regards to credit cards towards the end of the year, and set up for a really nice 2025.
Nice, Tevis. Hey, well, you've been on for quite some time, so I'm going to cut you loose, but really appreciate you. Thank you for coming on. Un Poco Mas. We normally give you just a little bit more, but today we give you, blockbuster news. No, it's really fun because I've been on you guys' show and I kind of drag it down. So tried to like shut up for a while and let you give some actual answers so people could, you could string together a sentence without me just yammering and nipping at your ankles. But anyway, really appreciate you. Thanks for coming on, and we hope to see you again really soon. We know the Un Poco Mas audience loves Tevis, guys. It's Fundamentals of Investing. Make sure that you get on over to Tevis's channel and subscribe. I'm sure he has one of them X's. Follow him on Twitter, follow him in all the socials. If you can find his OnlyFans, you can follow him there as well. But thanks, Tevis. I really appreciate you, man. Thanks for coming on.
Thanks, everybody.
Right.
Really good show. Thanks, Danny, for having me.
All right. If you want to, this is the only thing SoFi's released lately is this Buy SoFi wristband. This is what's passing for innovation. I don't know why they put Un Poco Mas on the other side, but thanks, Tevis. Peace.